Welcome to the weekly market update. I'm the Options Overlord, and this is the market week ending Friday, August 14, 2026. Educate, discipline, execute. Let us get into it. First, the ground rules. Every week, no exceptions. This is educational content only. It is not financial advice, and it is not personalized to you. Options carry real risk and are not suitable for everyone. Nothing here is a recommendation to buy or sell any security. There may be tax implications to any strategy, so speak with a licensed professional about your own situation. Everything I show you is a framework for thinking, not a signal to trade. Accountability first. Every week this channel sets a rule for the week ahead, and every week we come back and grade it in public. Last week the rule was watch VIX above 20 if breadth slips below 60. Both conditions together would have marked rising volatility and weakening participation. The verdict held. VIX finished 14.25, below 20, while breadth strengthened to 69.38%. Neither stress condition triggered, so the rule held. The scoreboard. The S&P 500 closed at 7,785.76, up 0.36% on the week. The QQQ closed at 731.07, up 1.11%. The Dow closed at 53,732.41, down 0.56%. The VIX finished at 14.25, down 0.65 points. The 10-year Treasury yield finished at about 4.7%, up 5 basis points, and breadth finished at 69.38% above the 50-day moving average. So options priced a weekly S&P swing of about 1.98%, while the S&P actually moved only 0.36%. Realized movement stayed below the implied weekly move. The regime map. 1 picture, 4 boxes. Where are we? This week, participation broad, index volatility compressed. Breadth is 69.38%, while IV rank sits at 9.89 for SPY, 27.25 for the QQQs, and 1.08 for IWM. Translation: participation broadened, but broad index fear stayed low. The QQQ remained the richest of the 3 volatility proxies, but even that premium was cheaper than last week. The premium read where the market is actually charging for risk. QQQ IV rank is 27.25, still the highest of the 3. SPY is 9.89 and IWM is just 1.08, meaning technology-linked premium still carried the richest relative pricing, but volatility compressed again. A higher IV rank is not free money, and a lower IV rank does not make a trade safe. Selection, price, structure, and risk still matter. If you want the free checklist I use before selling a covered call, the covered call qualifier is linked below. What actually mattered this week? The lead was the mix of cooler inflation and a softer consumer. Customer price index and the PPI, which is the producer price index, cooled enough to reduce near-term rate hike pressure, but retail sales fell 0.6%. Consumer sentiment weakened, and WTI, which is the West Texas Intermediate, the crude oil price, rebounded by about 5.4% for the week. The market moves show the mixed tape. The Nasdaq Composite gained about 0.1%. The S&P 500 gained 0.36%. The Russell 2000 gained about 1.1%, while the Dow fell 0.56%. On rates, the 10-year finished near 4.7%, up 5 basis points, and the 2-year near 4.17%, down 2 basis points. The takeaway: inflation cooled, but the consumer and oil picture made the week less clean than the calm VIX suggests. Risk watch. The VIX reads 14.25, low to moderate, but next week still has event risk. Import and export prices arrive Tuesday, 18th of August at 8:30 a.m. Eastern. Housing starts also arrive Tuesday at 8:30 a.m. Eastern. Industrial production follows at 9:15 a.m. Eastern. And FOMC minutes arrive Wednesday at 2 p.m. Eastern. On earnings, there are event risk examples, but not trade recommendations. Home Depot on August the 18th, with an implied move around 7%. Target on August the 19th, around 10%. And Walmart on August the 20th, around 7%. The discipline low VIX does not remove event risk when oil, the Fed minutes, and major retail earnings can reset the rates and consumer narrative. The Overlord Read: broader participation, cheaper volatility, mixed index tape. The divergence: breadth strengthened to 69.38%, while the VIX fell to 14.25%, and the QQQ IV Rank compressed to 27.25%. Why it matters: participation improved even as option pricing became cheaper, but softer consumer data and WTI up about 5.4% kept the macro backdrop less clean. Put simply, the market was calm at the index level, but the consumer, oil and retail earnings risks still matter. So here's the rule for next week. Set now, graded next Friday. Watch the VIX above 20 if breadth slips below 60. Watch level VIX 20. We are keeping the same stress definition for another week. Both conditions together would signal that volatility is rising while participation is weakening. That is the line in the sand, and we will score it in public next week, held or broke, with the reason. The free covered call qualifier is linked below. Thank you for watching. Stay disciplined. Let us go.